What's going on, everybody? Mark Fleetwood here. Welcome back to the Daily Grind Trader. KuCoin has changed the margin or the levels of margin for their cross-margin trading platform. It only goes up to 5x, at least in the US. So with that change, I've started really looking into trading futures. And I've got to say that futures trading seems so much more straightforward and easier to use. And I'm going to show you how to get into futures. Stay tuned, I'm going to tell you all about it. All right, everybody, we know the drill. I'm not a financial advisor. This is not financial advice. Simply share my technical analysis so you can use it as you see fit. But this video is not even a technical analysis video. But remember, you always manage your own money and you always manage your own risk. With that being said, we're going to hop right in. We're going to look at KuCoin. And on KuCoin, I am on the futures market. Right now I'm looking at the BTC perpetual. And think of futures like options trading in the regular stock market, but there is no expiration. There's no expiry. That's why it's a perpetual. It is constantly ongoing. You can hold this contract as long as you like. I would probably not hold it too long myself, but just you can if you want. With that, there are tons and tons and tons of futures contracts that you can trade, at least as many as at one margin. Plus, Ravencoin has a perpetual future that I can trade on KuCoin. So I can start doing my Raven analysis, actually trading Ravencoin on KuCoin and not have to worry about my mining stash. And that's the other thing that goes into this. You never actually hold the coin. You never have the coin. You never have to count how many you have and how much you have to sell back or buy back or whatever. The buy and sell is super simple in the future. And what I'm going to do is I'm going to go into a scenario here where right now we're looking at the price. Please remember that you never actually hold the coin. It is simply a contract. You're essentially signing a contract, and I'm going to use the term wager because I don't know a better term than that for this scenario, is that you are wagering against the price movement. You're saying if I buy or go long that the price is going up. If the price goes up by 10%, KuCoin is going to give me the 10% difference plus my money back plus that 10%. If the price goes down by 10%, then I'm going to give KuCoin the additional 10% from the initial buy. Still the same long and short, but there's no actual coins involved. There's no changing hands of actual assets. The leverage on futures goes up to 20 times. Be very careful. Trading with 20 times leverage can sound really enticing, but it could also be very dangerous. You have to know exactly what you're doing. You have to have risk management dialed in, and I'm going to give you an example of risk management, but we're going to keep it at 10 because intervals of 10 are just really easy to use. If you see here, there's like the green price, and that here is your current last price, and the one in gold here is the mark price. The mark price is simply going to be a fair value in case there's a super fast spike up or down and the value changes very quickly and you would have potentially gotten liquidated or something along those lines. This price kind of smooths things out a little bit. You can see this line here that runs with the price. So keep that in mind, that the mark price is a fair value. Kind of helps prevent really quick spike liquidation events. There you have a whole thing where you can read up on exactly the equation for the mark price, but it is just kind of a fair value as opposed to the actual last price taken on a buy or a sell. So now that all that's out of the way, that's kind of the little things that are different, little things you need to be aware of. We're going to go, current price is 38,520. I'm going to say that I want to short, but I think it's going to get up to 38,600. And that's going to be my 38,600 on my limit order. And here, if I take 25% on 10x, it costs me $75, and I get $733 worth of Bitcoin. Now there is the the options fee. There is a fee for futures, just like there's a maker and taker fee for margin trading as well, but it's not as easily seen, you know, right from the jump. But here you see for $75, you're getting $733 worth of Bitcoin. If you go to 50%, you'll get $14.66 for 150. Or you can just mess with these numbers until there's a dollar amount that you like. So if you go here, you're looking for to get just at $1,000. There you go. You've got 0.026, $1,003 to $102 cost. So you can adjust this easier, and you can see your percentage based, or just adding this up here until you get the actual dollar amount you want. Let's say we do 50%. Now we can check this box, take profit and stop loss of a long, or take profit and stop loss of a short. When I want to short this, I think the price is going to go down. I'm not going to make the move yet, but I'm just saying, say we short this. Now, since we have our price here, this is going to assume that this price gets hit and that it is the value of our entry. We enter at 38,600. If you want to do this very easily, take a 15% stop loss, 25% win. That 15% is going to be the 1.5% move. So you're saying that I'm willing to let the price go up 1.5%, and then that'll be my stop loss. If it goes up more than that, cut the trade. And 2.5% down, I'm taking my profits, and that's 25% profit. And that is the price here, and that is the price here for your stop loss and your take profit off of this entry. And you set those in there, and you sell or you buy, and it's that simple. You can do the same thing with a take profit of a loss, or take profit stop loss of a long. So you want to say, I only want to do a 0.5% on this stop loss, and I want to do 50% on the take profit. Now you can manually enter these. Say I'm going to do 10 and 20. And keep a consistent 2-to-1 ratio every time. I'm willing to lose 1% and gain 2%. And you can put those numbers in manually right there. You have a 2-to-1 reward to risk ratio for every trade. You can set it up with every trade that you do. Put it in there, and boom, that's it. Your position is here. It will show up here, and then it will show up with your take profit and your stop loss. That simple. Guys, just in case anybody is wondering, I have moved all my funds from the margin account for my trading challenge, and that is the $300 that's currently in here in the futures. That was the initial start at $200. I got kind of stuck, I got 50% profit, and I got kind of stuck, and I was in one long trade, and I closed it and had a decent profit, but I had lost 3 trades prior to that. So my run was kind of weird. I am up 50%, but I'm nowhere near as high as I'd like to be, based off of doing this challenge, trying to go from $200 to $2,000. But hey, I'm still up. I haven't lost anything yet. I haven't lost anything big. Haven't been liquidated, so that's good. But I did want to make sure to go over futures, because it seems like it's actually a whole lot easier, a whole lot more straightforward, and just kind of more cut and dry on what you're doing on your trades. So, and then they have the calculator option here, where you can do an entry price with leverage. If you're not in the US, you can go up to 100 times leverage. But entry price, let's see this real quick. Entry price here at 38,600. If we close it at 39,372 on our take profit on 10x leverage, and the size we have is 0.038 BTC, and we calculate. So the cost was 146, and the profits we would have gained just under $30 in profits on that trade, on a return of investment of 20%. So there's our calculator for this trade that we just put in, or not that we put in, but the one that we just kind of sampled. This is a calculator to let you know where your actual dollar amount profit would be. You get $30 off this trade, or just under $30 off of this trade. So with that being said, guys, if there's anything I missed, if there's anything more kind of in depth, let me know in the comments. Let me know if there's anything specific that you need to know. But I think for getting started, I think this would be enough to get you started and get you going. Remember, don't ever risk more than you're willing to lose. There is no debt ratio for this, so keep your leverage manageable. Keep your percentage of your overall account manageable, because you will get a liquidation price. If you open this position and you buy or you short, there will be a price associated to say, hey, at this price, you get liquidated. You should always have your stop loss way, way, way within that liquidation range. You don't want to get anywhere near that range. So with that being said, guys, that's the video for today. I hope you enjoyed. And as always, until next time, peace.